All right, the latest housing numbers for Greenville are in for September 2025, and wow, they are telling a really fascinating and honestly pretty confusing story. So let's dig into what all this data really means if you're even thinking about buying or selling a home right now.
So let's just get right to it. This is the question on everyone's mind, right? After years of this absolutely red-hot market, is Greenville finally starting to cool off? Well, the data gives us a surprisingly complicated answer. So here's the bottom line right up front. The market is absolutely in a state of transition. What that means is, for buyers, you finally have more options to choose from. But, and this is a big but, it's not getting any cheaper. So how is that even possible? Let's break it down. First up, let's talk about the most dramatic change we're seeing, and that's on the supply side. There has been an incredible surge in the number of homes actually for sale. Just look at that number, plus 40.8%. In just 1 year, the number of homes for sale in Greenville has shot up by over 40%. That's not just a small shift. That is a huge increase, and it's probably the clearest signal we have that the market is really changing. And this chart really paints the picture, doesn't it? I mean, just 2 years ago, we were looking at about 3,500 homes for sale. Last year, that number climbed to around 4,600. Today, we've jumped all the way to over 6,500. When you see it laid out like this, you really get a sense of just how massive this inventory boom is. So, what does this mean for you if you're trying to buy a house? It's a whole new world out there. That crazy era of intense bidding wars, 10 offers flooding in on the first day, that really seems to be fading. For the first time in a long, long time, buyers have choices and maybe, just maybe, a little bit more breathing room. Okay, so supply is way, way up. That's clear. But what's going on with demand? Well, this is where the story gets really complicated. It's almost like the market has a split personality right now. And this slide right here perfectly captures that puzzle. On one hand, you look at closed sales. That's what's already happened. And they're up over 20%. Looks pretty strong, right? But then you look at pending sales, which is kind of like our crystal ball for the future. And they have absolutely cratered, down by more than 27%. So what's the real story? The key here is to watch those pending sales. Think of them as the leading indicator. They tell us what's about to happen. And that massive drop is a really strong signal that demand is weakening and that a pretty significant slowdown is just now starting to take hold. So all of this leads us to the central paradox of the Greenville market. How on earth can homes be selling more slowly, yet prices are still going up? It doesn't seem to make any sense, but let's unpack this thing. Okay, first, let's talk about the pace of sales. It now takes an average of 54 days to sell a home here. Now that's up from 49 days last year. It might not seem like a huge leap, but that extra week shows that homes are definitely sitting on the market longer. The frenzy is over. And this number here really drives that point home. We now have 4.6 months of housing supply. What that means is if no new homes were listed, it would take almost 5 months to sell everything that's currently on the market. That's a big jump from 3.4 months just a year ago, and it's a textbook sign that we are moving away from a seller's market. This quote just sums it up perfectly. It really feels like the market is hitting the brakes and the gas at the same time. Everything we've seen so far, more homes, fewer pending sales, more days on market, that's the market slamming on the brakes. But at the same time, something is still pushing the gas pedal. And here it is. This is the gas pedal. This is the other side of the paradox, because despite all those signs of a slowdown, the median sales price is still up 3.5% from last year. So the market is cooling, but prices are not. And to put that in real dollars, this chart shows the median home price has gone from $309,000 to almost $320,000 in just 1 year. That's nearly an $11,000 increase, even as everything else is showing signs of slowing down. So to recap this bizarre paradox, we have more supply and a slower pace of sales, but that has not led to any kind of price relief for buyers. Not yet, anyway. In fact, prices are actually still climbing. Okay, so what does all this data, all these numbers, mean for the average person in Greenville? Let's talk about the bottom line and how these big market shifts are actually affecting real people. To really understand the real-world impact, we can look at the Housing Affordability Index. It's pretty simple. It just tells us if a family earning the median income can actually afford a medium-priced home. A score of 100 is kind of the magic number where things are balanced. Higher is better.
Well, Greenville's current score is 99. Now, I know that sounds really close to 100, but it marks a huge shift, especially when you consider that just 1 year ago, the score was 104.
So here's what that drop really means in plain English. That score of 99 means that for the first time in a while, the typical family in Greenville is now earning 1% less than what they need to afford the typical home. We've officially crossed a critical threshold into unaffordability. And that brings us to the big final question, doesn't it? With more homes for sale than we've seen in years, but with affordability actually going down, who is the Greenville housing market really working for right now? Because the data suggests it's a market that is increasingly slipping out of reach for the average family.